Hey, what's up, traders? Good afternoon. It's just 5 minutes to 2 p.m. It's Tuesday today, and we are short on gold. So, sorry, GBPUSD. I love gold so much, right? So we have a short position from the price of 1.4400 with a target of about 100 and is it 150 pips? I'm not sure. I'll get to the numbers just now. So our entry was at the price of 1.14400. And our take profit is at the price of 1.13100, and we have our stops just above that high at the price of 1.14950. So our stop loss is just about 55 pips, and our target is just slightly 2 times greater than that. So we have a reward to risk ratio just a little bit greater than 2 to 1. Obviously, I speak about this all the time. Price action, depending on the time frame that you're looking at, you should be trading in sync with the trend. That is golden. That is principle. So you are trying at best to always trade in sync with your given trend. As you guys could see from the left, all the way to the right, the price action is actually bearish. The market is moving in a downward direction. Hence, you should be looking for selling opportunities. So that's a 45-minute chart. I could move even higher to say 4 hours, 3 hours. All right, you guys, there you go. So you've got the evidence. What you're always looking to do when you trade is you're looking primarily for your price action. Where is the market going? Is the market going up? If it's going up, you're only looking for buying opportunities. Is it going down? Yes, it's going down. So you're only looking for selling or shorting short positions. Right, so price action is key. That is your golden rule. You do not want to be trading against the given direction unless you understand certain principles that allow you to counter trend trade. But even then, it's risky. Most of the time, the markets will be sideways. That's about 70% of the time, and about 30% of the time, the markets will be trending. So these major moves to the downside happen for about 30% of the time. So most of our trading is actually a waiting game. It's just being patient and waiting for opportunities to come to you. And then also being ready to meet opportunities where your trading plan agrees, where your trading plan verifies that, okay, this is where I should be getting into the market. This is where I should have my first exit strategy, where I should have my second exit strategy. And by that, I mean, obviously your stops and your targets, etc. All right, so let me just run the numbers quickly. Okay, so my first exit strategy is my stop loss at the price of 1.14950. My entry was at the price of 1.14400, and my take profit level is at the price of 1.13100. All right, so you guys could see the green bar and the red bar. In comparison to the green, the red is about 2 times smaller and the green bar is about 2 times greater. So that is what reward to risk ratio looks like. And in numbers, in essence, I'd be saying for every $1 that I risk on the trade, I stand to make $2 or just slightly greater than $2, because that reward to risk ratio is actually 2.36 instead of just an exact number 2. All right, so I've got a 55 pip stop loss and I've got a reward or take profit of 130 pips. So for 55 pips that I'm risking, I stand to make 130 pips. So that is just slightly greater than 2 in essence. All right, so if I risk $1, I stand to make $2 or slightly greater than $2. If I risk 10, I stand to make just above $20. If I risk 1,000, I stand to make just above $2,000. All right, so we spoke price action. Market is moving in a downward trend. So we're only looking for selling opportunities in a bearish market. And then secondly, what we're looking at right now is what we call a retracement. Some of you may understand it as a correction. So markets move in 2 different phases, right? So the one phase is where the markets are trending. That is what we call an impulse. And the second phase is what we call a correction, or if you prefer, it's what we call a retracement, right? So that's a common term. I prefer correction. All right, so we're in a corrective state right now. Like I mentioned, majority of the time, the markets are sideways. If you look at this piece of data over here that we've got, a lot of the time was spent with this market moving sideways, and the least amount of time was spent in a trending fashion, right? So there we've got a nice strong impulse to the downside. That's a nice trend to the downside that could have been profitable if you saw it beforehand. If you haven't, it's all good. You could still catch the next one. All right. So if you look at those candlesticks in comparison to the ones over here on the right, you can see there's much fewer candlesticks there on the left that have moved much quicker toward that bottom from the top. And then over here, we've got just a whole lot more candlesticks just kind of moving sideways. So you do not want to get caught up in what's happening over here. What you're actually looking for in particular is another nice move similar to that from a nice entry all the way to the downside. And usually you make your profits much quicker than you would if you just try to trade in and out of these small areas. 6th of September. So a couple of days have passed since I last spoke of this trade. This was taken on Tuesday, the previous week. So lights did go off, hence the gap between the technicals, hence the gap between the trades. I mean the video. So you might actually notice that, but I did complete my analysis later in the day, and the trade that I taken did take profit. So with the reward risk ratio of just a little greater than 2 to 1 for every $1 that was risked, we made about $2.36. So that was successful. We had a downward target of 130 pips, which was hit, and we had a stop loss of 55 pips. It was just under half of what we stood to make on the trade. So our take profit was hit nicely over here, and then we had some reaction to the upside, and obviously the price continued to drop even further from that point. But what matters and what's important is that you trade and follow your plan, and just be sure to have something that works out for you more than it fails, then you will be profitable. All right, I will not spend much time talking about this. I did give you some pointers at the beginning of the video as to what things you can look at to improve your trading. So those are things that you can note down and have a look at whenever you are running your technical analysis, right? So it's going to help you in future. So that's part of my master key system. So I did speak about the master key system. That's my new book that I am writing, and will be complete by the end of this month, right? So pre-sales are currently running, but I will not be discussing the master key system here as well. So I will run a couple of trades just to show you guys how the master key system performs, and I will talk about it more in detail in future videos, right? So this one is just a quick update on the GBPUSD trade. We did hit our target of 130 pips with the reward to risk ratio just a little greater than 2 to 1. All right, see you on the next. Thank you for watching.